Assets, anything which is in the possession or in the property of a business enterprise, including the amount due to it from other, is called an assets. Like whatever in your possession, like land, building, plant, machinery, when we talk about individual or a business firm. So anything which is in a possession of an individual or a business enterprise, including the amount due to it from others. Amount due to it from others means, suppose you have given loan to your friend, so that amount you have to recover, so that is also considered as a assets, because you will get that amount in the future. So in the other words, anything which will be enable a business enterprise to get cash or a benefit in future or in an assets. So in other words, we can say anything which will be enable a business enterprise to get cash or a benefit in future in an assets. If suppose you have a machine, so obviously you will use that machine, and by using that machine you will get some kind of benefit. So by using any assets or any type of property you are using, and you will get benefit, or your business will get benefit, so that is considered as a assets. Now feature of assets: the resources must be valuable, like land, building, plant, machine, cash, whatever assets you have that have some value. Resources must be owned by the business. It means you should be owner of that assets. Like you have bike, but real owner of that bike is your friend. So that is not your assets. So you must be owner of that assets. You have proper right to sell that property, or you have proper right to use that assets. Resources must be acquired at a measurable money cost. It means whenever we talk about account, that we record the transaction, or that resource have some kind of money cost, or that can be measured in terms of money. If it is not measurable in terms of money, that won't be considered as a assets. So assets may be classified. We can classify assets. First, fixed assets. So fixed assets refers to those assets which are held for continued use in the business for the purpose of producing goods or services and are not meant for sale. Like if you have fixed assets, so that assets which are held for continue use in the business, it means you can use that assets regularly in the business, like land, machine, building, plant. So these are assets which is regularly used in your business and not mean for sale. Generally whenever like you bought your house, so that is not mean for sale, that you will use for a long time. Or any businessman bought any shop, so obviously that shop for the long time, that is not for the purpose of sale. So example of fixed assets are land, building, plant and machinery. Fixed assets, we can categorize fixed assets against two types: tangible assets and intangible assets. Tangible assets are those assets that we can see and touch. Like tangible assets are those assets which can seen and touch, like stock, cash, land and building. So all those things that we can see and touch, that is considered as a tangible assets. But when we talk about intangible assets, are those assets which do not have a physical existence. It means it cannot be seen or felt. When we talk about intangible assets, that we know existence of physical, but you, and these cannot be seen or felt. But like you visit to a restaurant or a shop regularly because you like the services of that particular restaurant, and if you visit to a particular shop, that you know that you will get the good quality goods there. So that is the goodwill and that is the reputation of that shop. So whenever that person will sell their shop, so obviously they will charge for that goodwill or reputation. So that is called goodwill. So that is the intangible assets that can't be see, but some value associated with that. Next one is the current assets. Assets are those assets which are meant for sale or which the management would want to convert into cash within 1 year. So like we talk about current assets. So current assets that can be converted into cash within 1 year. Like you are the owner of the shop. So obviously for the purpose of sale, you have to buy goods. So if you are purchasing goods for the purpose of selling so that you can earn the profit, so that is the current assets. So it is also It is also termed as short-lived or active assets. It means after some time, like debtor. If you have given loan to your friend, so for the short period of time, within 1 year, that person will return that amount. So that is considered as a debtor. That is also a current assets example. And current assets also known as floating assets or circulating assets. Next one is the liquid assets. Liquid assets are those which are either in the form of cash or can be quickly converted into cash, such as cash, bill receivable, short-term investment. So liquid assets are those assets which in the form of cash or can be quickly converted into cash. In other words, we can say we exclude prepaid expenses and closing stock. Now, what is the mean of prepaid expenses and closing stock? So prepaid expenses are like you have paid that expenses earlier before using that. The best example is that you charge your mobile. It means before using that services you pay amount in advance. So that is the prepaid plan. So that is the prepaid expenses. And closing stock, whatever stock remain with the shop at the end of the year, so that is considered as a closing stock. So if we like current assets, whatever be the current asset, data, stock, cash, bank, closing stock, prepaid expenses, so total of the current assets, if we deduct or exclude prepaid expenses and closing stock, so that will be considered as a liquid assets. Liquid assets are those assets which are in the form of cash or can be quickly converted into cash. It means if you want to sell like whatever cash in your shop, that is the liquid assets. Whatever cash in the bank, that is also liquid assets. But if you want to sell closing stock, so in a hurry, if you want to sell it, you will won't get that much amount, whatever be the value, you will get less value for that. So that is not considered as a liquid assets. So except prepaid expenses and closing stocks, all current assets is considered as a liquid assets. Next one is the vesting assets. Vesting assets are those assets which are consumed through being worked or used. Like when we talk about mines, oil wells, so you that assets are useful till the mines have coal or any other mineral. If that mine will become useless if you are using that product regularly, and after some time that mines will have no coal and any other mineral, so that mine will be useless. So that is called vesting assets. So vesting assets are those assets which are consumed through being worked or used. If you are regularly using it, so it means you are consuming that product regularly. So vesting assets are those assets which are consumed through being worked or used. Fictitious assets or nominal assets you can understand with example, like for the purpose you want to start a shop, and for that you have to give advertisement, and the advertisement expenses is like 5 lakh rupees for the purpose of advertisement. So in that advertisement you have spent lots of money, and that benefit you will get that benefit over the period in the future. So that is considered as a nominal assets. It means these assets which cannot be realized in cash or no further benefit can be derived from these assets. Such assets include debit balance of P&L account and expenses not yet written off on such advertisement. It means you have spent money for that particular expenditure. Like in advertisement you have spent lots of money, you will get benefit in the future, but already you have made the expenses, you won't cover any cash from these expenses, but that will give you benefit in the long term. So that is considered as a fictitious or nominal assets. Like, thank you.